Well, good morning, everyone. Can you guys hear me? I've been having some trouble with my mic this morning. That's why I'm a little bit late getting into the room. Terrific. Thanks, Joe. All right. Hold on a second here. I got a very interesting email from somebody yesterday, and I haven't had a chance to write them back yet. And I wanted to make sure he was in the room because today would be a great opportunity to discuss his plight. It's a plight that affects all of us as traders, really. And essentially it's the matter of consistency. I'm not going to share the person's name because I don't know if he wants me to, but you're going to sympathize with the email. Okay, so this is what we're going to deal with a little bit today. Okay, he writes, Eric, it's days like today that I begin to think I can't make it with this system. I took back-to-back spankings for about $2,500 on a $100,000 demo account. Now, I had opportunities to get out of these trades without taking the losses. It seems like when I do that kind of thing, I take myself out of a lot of winning trades, and I spend more time questioning the validity of the signal, even though it is a high probability setup. But I can absolutely not have results like this trading live. Did I do anything wrong here? This is my problem with trading deep stop losses. I'm beginning to wonder whether or not I can consistently make gains. Had this been live, I would have had to win 5 to 6 trades in a row to make up the loss. On a live account with a single contract, I would still be looking at around a $350 loss, which translates to 7 trades to make it up. Again, he goes on about his frustration and so on. Let me see if I can share the image. I think I can. Okay, so here was the chart that was sent, and it was from yesterday's session. And you can see some of the signals. I'm thinking that these trades here were the signals that were taken. Some were winners, some were losers. And what can we do to help eliminate the losers, obviously? All right. It's a great question and one that plagues all traders, really. All right, let's see if we can't get a handle on this. Now, yesterday we were looking at building into a position, right? We were looking at taking a signal with just a onesie. You know, here's a buy signal. It's coming off of a hard edge bounce. Everything is in sync. And we would take this signal, we would try to frame it in such a way that we could add to the position. You know, maybe our account would allow us to trade 2 contracts right now. Oh, let me see. Could I take 2 contracts here? Yes, I could. So Trade Manager says, according to my account, I could take 2 contracts. So maybe what we would do is we would enter here on this signal and look to add another position above here. So we were looking at testing the waters, essentially, trying to take a trade, prove the trade, make sure that the trade was going in our favor before we started adding to it. Thereby, if the market reversed on us and stopped us out, we would take a smaller loss, right? Because we're only testing the waters with a single. Today, we're going to look at the other side of that equation, and we're going to look at taking the trade with extremely tight stops. In fact, we have a signal here brewing on the NQ now, which I'm going to do. Now, these are actually going to be really tight settings, and I'm going to show you what I've done here in a second. What we're going to do here is we're going to trade size. So we're going to go in with size, but we're going to trade very tight profit targets. I've actually borrowed these as targets from a friend of mine, and there's no target that is going to be right 100% of the time, but this is how a friend of mine likes to do it. And what he does is he actually runs 3 contracts. Oh, actually, I need to change this. Hold on. Got to go back to manual mode. So I'm running 3 contracts. And I've got 3 profit targets. My first contract is only 3 ticks. My friend's logic is that's for the broker. That pays the commissions. The second target is 5 ticks. That's his way of guaranteeing something, because at 5 ticks, he takes profit on a contract and he rolls his stops to break even. Now, needless to say, unless there's immediate momentum, you're going to get stopped out. But in his opinion, he would rather be stopped out at break even than to take a loss. Okay, let's see how his strategy works now. So we've just engaged our first micro-macro cross signal. Let's see if we can get 3 ticks for the broker. And I've engaged the auto break even. If you're not aware of it, Trade Manager does have an auto break even function. And his logic is that, like I said, first contract's for the broker. That pays for the commissions on the trades. Second contract is his guarantee of taking something out of the market. And then the third contract is the runner if the market really builds some momentum. Okay, so while we're waiting for that to unfold, I'm going to try to give you my best advice for being more consistent. Okay, sorry about that. I'm fighting off a cold and it's driving me bonkers. Okay, first off, you need to recognize that trading is probably going to be unlike anything else you've ever tried in your life. There's no such thing as, being right all the time. Losing trades are part of trading, unfortunately. So when you take a losing trade or a series of losing trades, you have to protect your capital in such a way that you're not going to destroy your account. when it happens. It looks like we're about to get tagged here. Now, how do you protect your account? Well, there's two basic ways to protect your account. Number one is to use the risk percent module, and number two is to perhaps number one is the risk percent mode. Number two is to run a deeper stop. And by a deeper stop, I mean find a significant swing point in the market and use that to cover your trade. Now you can see here it looks like we would have got tagged even at that swing point. Here comes a red bar buy. Let's just try this again. I'm curious to see how this is going to work. The third thing you can do is you can do a second push entry on your signal. Now this is going to be something that you're going to want to do when you're less certain about what the signal might do. Like here we have a red bar buy. We need to see a test of the extreme. It's very likely the market will rally from here. This first micro macro cross that we were looking at, I wasn't overly thrilled with it because of course we had these highs right up here. But I thought, well, maybe we can still scalp out a little bit out of this trade. And after all, it is a first micro macro cross. But you can see it didn't work out, and now we're in a bit of a hole, aren't we? We've started the day, and now we've already put ourselves behind the 8 ball, and before we can make any money, we have to dig ourselves out of this hole. Okay, so here was a red bar buy that we would have been better off selling. Okay, so note to self. The other thing you need to be aware of, and you might want to make a note of this, is that there's going to be days that the market is not cooperating. So it's not like you can show up to work, do your job, and get paid. In fact, trading, I think, might be the only business that you can show up for work, do the job, and lose money, and have it cost you money to do the job. So recognize that when you open up your chart and you look at the overnight and you say, whoa, this is the overnight. Gee, that kind of looks like the overnight we've had all week. And what has been the result of this week's trading? Well, it's been pretty dismal, hasn't it? The market hasn't been very cooperative. We haven't seen a whole lot of follow through one way or the other. A lot of choppy sessions. Versus, you know, sometimes we see an overnight session like this where the market makes a big run and then it comes into the market open and it's like, okay, we can tell the market's a little bit more active. But look, the Europeans aren't even touching the market. What do they know that we don't know? Nothing. So recognize the fact that not every day is going to offer ideal opportunities. So here, from this fellow's email, you can see, well, I can't roll it over, but the market open was right here. Well, actually, I don't need to. I can do this. I can go to the actual session yesterday. Okay, so market open, everything looked like this. A little bit more active in the overnight. You know, not very enticing. A little bit up, a little bit down, but not, you know, not what we would say would be normal. A few yellow bars here. Looks like, you know, we've had, it tested the extreme. Prices might be heading lower. The market opens, comes out, gives us a first micro-macro cross to the downside. Okay, the market follows through, hits our profit objective, and then goes screaming higher and gives us a first micro-macro cross to the upside, which promptly fails. And let me see, was that the signal he took? No, it was the next one. It was the macro pullback signal. And I think I got in on this one too, or if I didn't, I probably would have. And the market brings us in and promptly reverses, and there you go. We are stung for a bit of a loser there. Now, personally, I have noticed that many times the first half hour of trading is not the best time to be in the market. A lot of times when I'm trading, I won't trade until 7 a.m. my time. And to avoid the temptation, I won't walk into the market or walk into the office until a few minutes before. The problem is, and I've noted this in my journal, is that at quarter to the hour, after those first 15 minutes in, we seem to get a little bit of a sucker signal. Now, this is actually the signal right here. Fortunately, this one did not trip, but it is not unusual to see that signal trip and then reverse on you, take you out for a stop. I'm just trying to get into this so I can test this tighter stop scenario. All right, so I think the number one thing is it's important to recognize that not every day is likely to be a good trading day. There will be days when the market is just going to be downright difficult. Now, to make up for that, there's going to be days where you're not going to be able to place the orders fast enough. The market is just offering up so many opportunities. So it's not like it's necessarily a no-win scenario. There will be times that the market is just going to be out of control, and it'll be like shooting fish in a barrel. You won't be able to take the money out of the market fast enough. So those kinds of days will offset days like we've seen this week. What else can you do? Well, the other thing that I've mentioned sometimes is restricting the number of trades that you take. And looking at the types of trades that are winning and the types of trades that are losing. So what I mean by that is we had a legitimate first micro-macro cross signal here. Yes, there was resistance and such nearby, but this was a legitimate first micro-macro cross signal. It should have worked out. You have to excuse me for a second. I'll be right back. Sorry, my nose is starting to run like a tap. Okay. So when sometimes what I will do, or what I'll do all the time, is I will make a note of which direction seems to be paying off. Sometimes the market is going to be determined to only go one way, and it can be a mystery. And sometimes the only way to find out is to actually take a trade and see whether it wins or whether it loses. Because honestly, in some respects, trading is very much like gambling. You know, if you've ever been to Vegas or a casino and you've played 21 or whatever game, you know, you could be doing everything right and you can still lose money. You know, like I know basic blackjack theory. I know which cards are higher probability cards to hit and which ones I should stay, and I can still lose. So in that respect, you know, trading is not unlike gambling. There are no guarantees. We are doing a very difficult thing here, folks. We are trying to forecast what price will do next. So here was a first micro-macro cross signal, very high probability signal. We know this signal very rarely fails. We're getting a first micro-macro cross to the downside now. That's why I keep following this one. I took it right on the hash mark, and it brought me in, promptly stopped me out. So what does that tell me? That tells me that I should probably be a seller today. This was an effort on the part of the buyers. It was a solid signal. There was no reason not to take the signal other than the fact it was only a minute or two after the market opened. But this signal failed to the upside. Okay, now we're testing it to the downside. Let's see how this signal works. And I might hold my stop just back here. Now, if this signal fails also, then I really have to be suspect about what's going on in the market today. When I have two high probability signals fail, and you know, I can look at it and I can say with this first micro macro cross, well, maybe if I had run a deeper stop, the trade would have worked out. No, it would have failed regardless where I had put my stop. So this is a failed first micro macro cross, this one right here. So it's telling me, don't buy today, only sell. Avoid buying opportunities. Now I'm testing the seller's side. I'm testing the seller's commitment. Okay, so now the buyers are starting to show their hand. I need to see the sellers push back. And once I see the sellers push back, that will be the time that I can become more aggressive with my stops. When I first start the trade, I should try to give myself as much room as I can so that I don't get stopped prematurely. You know, if I held my stop, if I ran my stop just above the high of the signal bar, I would have been stopped out already, and I would have sucked up whatever it was, $150 loss, give or take. Now I'm trying to give the market enough room here, and I'm looking at things like, you know, here was support, here was support. I'm trying to give the market enough room that this trade can actually work out. Okay, so here come the sellers. You can see they're pushing a bit. Let's see if they can form this bar lower. And if they can do that, then that's going to be time for me to start pushing back or joining them lower. And I can use something more aggressive like the bar high-low. I have to say my friend's parameters aren't performing any better than what I would normally do. All right, here we go. All right, so now the sellers are pressing. If I chose, I could go with my bar high-low strategy now and follow the market down bar for bar. Is that where we're at? Yeah, I guess that's where we're at. That seems odd. Should be up here. Two bars back, 1, 2, 2 ticks off. We should still be up here. Okay, so the sellers have started to move the market or tried to move the market lower. Now, hopefully they'll, push back one more time here. No, they're not going to. Okay. So I've had two signals that should have worked. Oops, wrong tool. Two signals that should have worked that failed. I couldn't even hit a 3-tick target on those. So what's that telling us? Well, that's telling us that the market's not really cooperating today, is it? These were both high probability signals. They were both high probability trades. Okay, so let's say, well, that was just opening range. Let's say we ignored the opening range, and let's say we didn't start trading until 7 o'clock, which coincidentally happens to be right now. So now we walk into the office and we look at our chart and we say, whoa, look at the market this morning. We had a first micro macro cross fail to the upside, so that's making me more bearish. We had a red bar buy fail and move lower. Okay, that's making me more bearish. And now it's like, uh-oh, we had a macro pullback signal here fail. So what's going on? The market is neither bullish nor bearish. So if I walked into my office and I fired up my computer and I'm looking at a market like this, I know it's going to be very difficult trading today. It seems like the market is just going to give us some false signals and then keep moving back and forth. Now, personally, if I have two high probability signals fail, I'm probably going to sit on my hands for a long time, at least until I can see something really strong. I've already incurred a $600 loss, which brings me to another point I was going to make, is you should have a pain threshold on the day. And typically, my pain threshold is 5% of my account. 5% is enough that you should be able to give yourself a chance but not so much that you damage your account. Now, I realize smaller account traders are going to have to maybe round that number up, and larger account traders can round that number down. But for me personally, my pain threshold is somewhere in the neighborhood of $1,000. If I get sacked for $1,000 on a day, that's enough. That's enough getting beat up that I don't need to keep playing and keep getting stepped on. You see, the problem we have as traders is we're a very optimistic bunch, really. We keep thinking, well, it's that next trade. It's just that next trade. And sure enough, if we avoid the next trade, that'll be the one that will take off. So I'm not opposed to taking another trade, but I'm going to take a look and see how the market is responding. And if I miss a trade or two, well, so be it. The market, it's just one of those days where the market does not want to play nice. So the point I was trying to make, that I was kind of talking about in a roundabout way, if I have two high probability signals fail, I may well stop trading for the session. I've already incurred $600, a loser, off two high probability signals that should have worked. And I might just say, well, okay, today's not the day. So let's say now that we ignore opening range. And quite honestly, if it wasn't for the trading room and people insisting that traders have to start as soon as the market opens, I don't know where that idea ever came from, but they do. Okay, let's say we start trading at 7 a.m. So we're going to ignore what happened before, and let's see if we do any better this time round. So we're going to look now for our first micro-macro cross signal. We're going to say, okay, the market sorted itself out. It got rid of all its issues during that first half hour, and now it's going to settle in, and let's see if it gives us anything tradable. And I know I'm only concentrating on the hawk here. It's because this is the only tool that I've set these extra tight parameters to. But I think it's very important to recognize that there's going to be some days that are just not worth trading. Jesse Livermore, the famous stock trader back from the 1930s, around the turn of the century, he would not take a trade unless he thought, I think 10 points was his magic number. And this is, like I said, going back to the early part of the 1900s, where 10 points is a whole lot more than what it is today. But if he did not think that the market was strong enough to at least give him 10 points, then he had his own way of evaluating the market, then he wouldn't take the trade. In fact, one of his famous quotes that I like and I put on my nightly updates is, "The money is made in the sitting and the waiting, not in the trading." Another thing that you can do that will sometimes help you gauge the strength of a trade is to throw a trend line on here. You can see from this trend line that there is a chance the market's going to drift a little bit lower, maybe give us a macro pullback signal. That's why another reason why I have my stop a little deeper. And even though this is a first micro-macro cross signal pending, it might need a little bit more room to actually sort itself out. Okay, so let's adjust our trade somewhat. Let's take it below that support. Yeah, like Joe says, sitting on the sidelines is a position. That's right. We tend to forget that, don't we? That flat is a position. Yeah, I know James is saying maybe the YM will offer better signals. I'm sure it will. Jim, what I'm doing though is I'm just playing with these tighter parameters. So I've only programmed them into the NQ right now, which is why we're fiddling around with the NQ. All right, so now this is a macro pullback. Again, another high probability signal. We're going to pretend that we didn't do anything through opening range, and now we're going to say, okay, this is the first test of the market today. All right, we're at break even. The broker's got his money. Actually, I should go break even. Okay, so now we got a little bit of our money. And we're out at break even. So that third contract, we made money for the broker, and we made whatever it was, $25 for us, and then we got stopped on the third. Now, this is the way this particular friend of mine likes to trade, and maybe I need it to be break even 0. We'll see. Nope, would have got stopped break even 0 also. But his premise is that he likes to take ultra quick profits and leave a runner in case the market lights up. Okay, so we've had one winning trade to the upside. It was a high probability signal. We didn't reach our high probability profit target just yet. If we had gone with our regular DTS target, which would be 10 ticks. So we're in here, 10 ticks, 58 would be right up here, 60 half, I think, just on the high. Okay, here comes another macro pullback signal. Now we're already below the trend line, so that's a little bit of an issue. Let's see if they're going to hit twice. Maybe we'll get the runner on this one. Come on. See, it's problematic when we break trend lines because there were buyers here, right? There were buyers off of this trend line. It came up, sellers knocked them down. Why? Well, because there's sellers right here. So very much a battleground where we're at right now. Well, I'll leave that line up there because I think that was our profit objective. our 10 tick, what would normally be our 10 tick target. Okay, broker gets paid. We got paid. And we're out of break even again. So, this is, if we hadn't taken those initial losses, what was that before? 615? I think that's what it was. So we'd actually be $85 to the good. Of that, $50 would be ours, which doesn't sound like a lot, but of course it's better than a $500 loss, isn't it? Or a $600 loss. Now, I mention this because this is the way this particular friend of mine likes to trade. It's not that it's better or worse. It's just what suits him. Now, if you like the way that's shaping up, well, then maybe that's something that you want to investigate a little bit. Okay, now had we not handled the trade that way, you can see that we would have incurred another loser. So even in spite of, if we ignored the first half hour of trading, we would still have incurred a losing trade here out of the gate, which would have been a high probability signal. Right? We know a macro pullback signal is a high probability signal. So once again, it just lends to the notion that this is maybe not a cooperative day. The market may just be happy churning things up, going between the highs and the lows. All right, so now we have the first micro-macro cross signal. We're going to try this one again. And let's risk it up to here. And let's see if perhaps we can't get a runner out of this one. So once again, I'm looking at all this support through here as a place to cover the stops. A fundamentally sound place to cover stops. Now, coincidentally, look at this, there was buying going on here before, wasn't there? Because we tried to sell that macro pullback to the downside, and we got stepped on. Joe's asking, is it the last trading day of the month? Not for the stock indices, but for the grain markets, it's the last day. So if you're looking at some of the grains, you're going to need to adjust your trading months. Okay, so now we're into yellow bars, so that nixes that trade. And you can see here too, just a whole lot of yellow bars telling us that maybe this isn't going to be a very good trading session. Yeah, James is saying it looks like a lot of trades that way. The commission would be overwhelming. You may not have been in the room yet, Jim, when I was explaining this. We're looking at, these are actually parameters used by a friend of mine, and he does fairly well with them. And what he does is he runs a 3-tick target, a 5-tick target, and a runner. And the 3-tick target is for the broker. So the first 3 ticks goes to the broker, and the next 5 ticks are his. So he feels like he's locking in some sort of profit. And then the third one is the runner in case it's one of those moves where the market actually takes off. Now, of course, the problem with his trading is that when he does incur a loss, it can be rather substantial. And this was the email that I received last night that I haven't had a chance to respond to yet, so I thought I would address the issue in the room. You know, how can we be more consistent as traders? And the first thing that I pointed out was that not every day is going to be a tradable day. You know, when you open up your chart and you see this was the overnight, just a tiny little session like that, that tells me right off the bat, this is going to be a difficult day. This is going to be a very difficult day. Because the Europeans weren't ready to commit to anything. Okay, and so then we had a first micro-macro cross signal fail. Should have worked. Had a macro pullback signal fail. Should have worked. We had 2 high probability signals fail. This one worked out, but only because we were running the ultra tight trade parameters. If we ran our normal 10-tick target, this one would have also failed. So you have 3 high probability signals failing in a row. That tells you that this is not a day to trade. Pack up your toys and call it a day. Or come back in the afternoon. Let everybody thrash it out for the session, and come back in the afternoon and see if things aren't shaping up by then. Okay, we're just going to give this a little more time, and then we're going to look at something else here in a sec. Okay, this is a green bar sell. It's not a high probability signal, but I'm playing with these parameters, and we're going to get a little trend line reaction here, which you're going to see in a second. Oh, I think I understand what Joe was saying. I think Joe was saying it's the last trading day of the month, and that might be accounting for some of the um, choppiness. Well, that could be. I've never really followed that, Joe. Maybe you're onto something there. You can see we've already violated this trend line also, right? It didn't honor the trend line going up. It's not honoring the trend line going down. Maybe I should be looking at buying the failure here instead. But we'll take it with trend. Look at our macro line. It looks like a Mexican flag. It just keeps changing colors. It's red and gray and green and gray and red again. Our bars just keep changing colors. Okay, we never printed the green bar sell. So if it wasn't for you guys in the room here, I would not be here right now. Looking at 3 failed signals like this, looking at all these yellow bars, this is not a market that I want to be involved in at the moment. A lot of times too, what I will do to try to pick up on the better signal is I will try to give myself 2 reasons for taking a trade. If I can't think of 2 reasons to take a trade, then I won't take the signal. Now, 2 reasons to take this trade here would be fairly easy. It's a macro pullback signal, and it looks as though the market has tested the extreme and failed. It's retesting old support, which should now be resistance. So this should have been a high probability signal, this one right here. This one, same thing, macro pullback signal, failure of the macro pullback sell, old support, supporting the market, maybe a run up to the resistance, also technically a first micro macro cross. So I can have 2 or 3 reasons for taking that trade, and it too would have failed. I'd always try to work trend in there as one of the reasons. Yeah, Jim says, okay, let's go to brunch. I'll buy the first round of Bloody Marys. So I think your biggest defense as a trader is to recognize when the day is going to be difficult. And how do you do that? Well, you can see when you're getting into it that if the overnight is especially quiet or especially choppy, it could prove to be a difficult day, just for kicks, because there's not much going on anyhow. Let's take a look at the overnight earlier this week. Okay, so there's the overnight there. So you open up your charts and this is what you're looking at. Okay, it's going to be a difficult day. Let's take a look at the overnight here. This day actually had a little better follow through, but even so, from the London Open to here, fairly quiet. Right? At least this one seems to have a little bit more directionality to it. as opposed to what we've been seeing the other days. And this one too. Look at this. What a tiny overnight this was. And this, looks scary as well. This day actually had some movement to it. But you wouldn't have known it looking at the overnight session. All right, you guys, I need to go deal with my nose again. I'll be right back. Okay, I'm back. All right, let's see if there's what else we can do to try to protect ourselves, okay? Yeah, Dustin writes, A day like yesterday and today would have blown a quarter of my little trading account had I been live. All right. If you are trading a smaller account, I think you're going to be better off trying to build your position size. Now, if you're trading a really small account, you're going to be limited to singles anyhow. But I think you're going to need to put yourself in a position where you're testing the waters. In other words, like what we were doing yesterday. I'm only going to do this one more time, and then we're going to take a look at building our position again, because I think I was actually very pleased with the results yesterday. We would have done a little better had we gone in with size initially. But you know, the whole thing about trading is that once you have something that works, it literally becomes a numbers game. You just do more of whatever is working. I'm going to clean this up here a bit. I do believe it is also useful for you to shoot trend lines across your charts. F3 is the shortcut for the big trend line like this. Only because trend lines, there's a lot of traders that follow trend lines, right? So when you start to see the trend line leaking through the top, well, maybe that's going to be a sign that the upside is going to fail. And now you can see I've just adjusted it there. Because, you know, maybe this was the anomaly now. Like everything trading related, it's not an exact science, and that's what makes it so darn difficult. If we looked at a time chart, it would look exactly the same here. Everything, it would just be going sideways. I can almost guarantee we're building a very nice little sideways channel. And we want to avoid trading times like this. Next week, why don't we start, we're going to only look at quality trades. We're going to employ some of the things I've been talking about, only taking 2 signals, having trading quotas, scrubbing the day if necessary. My targets don't seem right. There's something wrong here. My computer's acting a little funny this morning. I didn't have a chance to reboot. 1, 2, 3. No, it's right. Okay, it's just me. It's not the computer. And even these little trend lines like this can be very helpful. Ooh. Jim says he counted this week, he's had over 10 trades that missed by 1 tick. Yeah, that's, wow, 1 tick. That's the kind of week it's been. Yeah, and look at that. See, zero follow through on anything. So if you didn't get the message already from the failed first micro macro cross, failed macro pullback, failed macro pullback, failed first micro macro cross, this is not a good trading day. Right? This is not a day that we are going to make money at. Or if we do, we're going to be darn lucky. Dustin asks, what do you think of the auto trendline tool and the Bollinger Band suite? Do they work well with DTS? Well, the nice thing about DTS is that it is complementary, right? You can put other indicators with it. So let's say, well, whatever. Let's just choose one here, on balance volume. Come on. Well, I hope I didn't break anything. You know, if this is your thing, if you like OBV, then, you know, go with it. Is it going to give you conflicting signals? No, oops, not at all. You know, if you look at it like this and say, oh, okay, well, it's broken down to the downside, we might see something move lower here or whatever. The key is not that you're missing some sort of other indicator. The key is not that your settings aren't tweaked just right. The key is recognizing that there's going to be some days that are not tradable days, where the market is just not cooperating. And the key is capital preservation. And by that I mean, compare this result with what we did yesterday, where we were going in with smaller amounts. In fact, let me change this over. And I'll go back to how we were doing things yesterday. So you know, before you can make any changes to your trade manager, you have to turn it off. And I think, did we have a runner in play the whole way? I think we did. But you know what? Why don't we take half of our profit? Oh no, because we're going to build a position. That's what we're doing. So we're not going to have any runners. We're not going to have any targets. Yeah, we'll change that. And I'm going to turn the auto break even off. Because I want to manage my break even myself. Okay, so now once you've made all your settings the way you want, you go back down here to your enabled button, which is really your on-off switch. Apply it, and now we have the new settings. Okay, so what we're going to do now is we're going to look at possibly building into a trade. So all these situations here where we took losing trades, we would have just gone in with a onesie, and instead of losing whatever it was, I lost $300 or something, I would have lost maybe 100, or if I risk it down here, maybe 1 1/4. This one, I think I risk it up here, would have lost about 150. So now we would be down, what, about 250, 300 bucks. Oh, this one, I forget where I covered it. Let's say I covered it down here. So let's say, what were we down? About 300. Now we would be down about 400. Essentially about half, right? About half of what we're looking at right now. And this one, where did I cover that? Somewhere around there would have been another $100 loser. But it would have been a whole lot less painful. Still, not good results. Still telling me the market is not following through on my signal. And yes, there might be a signal out there that is working today, but we don't possess it. Our signal is telling us don't trade today. The question is, do you have the courage and the discipline to say, I'm not going to trade today? I think it was Joe who mentioned earlier that flat is a position too. Dan is asking, is the auto trend line included in DTS? No, it's not. Auto trend line is an add-on indicator, as is the Bollinger Band suite. Now, having said all that, the Bollinger Band suite is a very good suite. There's no question about it. But you only want to be adding things to your DTS system that's going to help you make a decision. Some of you are new in the room and you may not have heard all my stories yet, so I'm going to share with you a story. Before Adam ever got started with Indicator Warehouse, Adam was the ultimate tweaker. And I don't mean tweaker, drug tweaker. I mean indicator tweaker, trading tweaker. He was always on the hunt for the latest and greatest. He would always be on the lookout for the next best thing. Oh, and while we're talking about that, I want to point out here that we don't always have to take the trade on the hash mark, right? Like when we were looking back here at this first micro macro cross, and I mentioned that this high might have given me pause, there was nothing wrong with waiting for a second push on the entry. This one, I would have taken hands down. This had every reason that trade should have worked out. And when that one failed, honestly, I would have taken this one too, because it didn't want to go lower. It only made sense it should want to go higher. But here we are with the first micro macro cross to the upside. I see that there's a trend line there. I don't need to take it right on the hash mark. I can take it on the other side of the trend line, especially given the way the market's been going today. Right? So remember that too, that the hash mark is only a suggested entry point. You are allowed to use your head when you're trading. You are allowed to say, oh, okay, there's a trend line there. Maybe I'll enter on the other side of the trend line. Maybe that will be a little bit safer. All right, so I was telling you guys about Adam with his tweaking of the indicators. He hired, I think, Indicator's first inventory was all the indicators he personally had programmed by programmers. He would go search out programmers and say, I needed to do this, I needed to do that. He came in contact with a group of brilliant programmers who had a very good signal generator. And they were trading their signal generator, and it was working fine until, guess what? One day, it didn't work. So rather than say, well, that's the way the markets are, there's going to be some days where your signal generator is not going to work, what do these guys do? Because they're programmers and not traders, they tear their system apart and they reprogram it to account for the new anomalies that they've discovered, and then they go back to testing it. And they're testing, and it's working just great until the day that it doesn't. And then, once again, rather than say, well, that's trading, that's how it goes, no, their solution is to tear it all apart again and rebuild it, reprogram it. and this went on for a year. Last I've heard, they're still programming and not trading. It's because trading is not just the signal generation. Yes, signal generation, very important. I don't deny that for a second. But there's more to trading than the signal generation. You have to place correct stops. Like right now, we're in this trade. I fully expect the sellers to knock this trade down somewhere. I don't want to get stopped out until I can see whether the buyers are going to push back. And when the buyers do push back, then I want to start pushing with them. So I'm going to try to keep my stop out of harm's way. I'm not in too heavy yet. And we'll see if the trade does go in our way, in our favor. Is there a place I can add to it? Well, maybe I want to add to it above the high. Maybe I want to add to it above, what was this, yesterday's high. Okay, that seems like a logical spot, doesn't it? So I'll add to it if we get above yesterday's high. So if you're a really small trader, I think this is going to work better for you. Test the water, try to add to your position. Recognize that there are days that are not going to be worth trading. Recognize that losses are part of trading. I worked with one fellow who, I don't know how he ever got it into his head, he thought that he would never have a losing trade. Oh, fantastic. Joe nailed a winner on gold. Good job. Yeah, the NQ is not the market to be trading today. So Dustin is saying, so look for a larger overnight and only trade in obvious trend. Well, obvious trend, definitely, yes. The bigger overnight sometimes is a clue as to what to expect. This overnight seemed especially quiet. Now, when the market first opened up, we did see what eventually ended up resembling a test of the extreme. So when I flash a first micro-macro cross signal lower, where is it? Didn't get one. I would have been open to it. Yeah, definitely the obvious trend. It's nice to see a little bit more activity in the overnight, to be sure. There was something else I wanted to mention, and it's totally popped out of my head. If trading were a science, it would be a lot easier, right? If we could quantify it and say, well, the market is doing this, therefore that must happen. But trading obviously is not a science. It is an art as well as a science. as you trade more, and it's a learned skill too, I suppose, just like any other skill. You know, when you first started doing whatever it is you're doing in the real world, whether you're a carpenter or a plumber or a lawyer or whatever, it takes a while to get proficient at your craft. And whenever you're learning something new, there's going to be some bumps and scrapes along the way. Yeah, see, like Dustin says, I know of a guy who's been designing and testing for over 5 years. He still is. Every time the market changes, he's looking for new settings. And that's a dangerous cycle to get into. And you know what? It is true of almost all losing traders that they become obsessed with signal generation. They think if I can only avoid the bad signal, I won't lose money. And that's not what's going on. They're losing money because they're probably overtrading. That's the biggest killer on anybody's account, is overtrading. And honestly, it's a big temptation. You know, you get a day like today, you think the market has to give you something. No, it doesn't. And at the end of the day, you know, I'll come back to this chart at the end of the day, and the NQ may have made a huge spike higher or lower, and I wasn't there to catch it. And, you know, I'm going to be a little annoyed. And I'm going to think to myself, well, why didn't it do it while I was sitting there waiting for it? Well, because the market doesn't have to do anything. If you happen to be in the right place at the right time and the market is actually moving in your favor, then fantastic. But if you're sitting here all morning and this is all that you see, well, that is your job description now. In fact, somebody asked me about a book recommendation. If you haven't read Reminiscence of a Stock Operator yet, it is worth picking up. You can buy it on Amazon dirt cheap. There's used copies to be had. Go to your local bookstore. They probably have it. It was written by Jesse Livermore under a pseudonym, and I forget what pseudonym he used, but it's essentially his life in trading. And he was trading stocks, not futures, and it was a different world than ours. But human nature really doesn't change. The principles that applied back in his day still apply today. You might be able to mine a few nuggets out of there. Yeah, I agree with this. Joe says trading is understanding mass psychology. And that's one reason I appreciate the mean Renko bars, is because it shows me the buyers and the sellers mindset, right? I know the sellers are digging in here. I know buyers are prepared to buy here because we're making higher swings. I know the sellers are trying to knock us down. I haven't seen the buyers come back yet. Yeah, Dustin says, what was the name of that book? Reminiscence. I'm going to spell it wrong now. Reminiscence of a Stock Operator. get you the title. You know what? You might even be able to find it, a free version online if you don't mind reading online. Edwin Lefevre, that was the pseudonym he used. You can buy it on Kindle on Amazon for $1. For $12 or $8 used, you can even get an audio CD, so you can listen to somebody read it to you if you don't want to read it yourself. Used paperbacks from $12. That's not bad. What? Hardcover, $122? Somebody is on drugs. I hope that one's signed by Jesse Livermore. All right, so we're making a little bit of progress here, just a little bit. And you know, it's great fun to read these books and research and do all this sort of stuff. But like I said, sometimes with trading, there's a certain maturity that you have to come to realize that some days the markets will just not cooperate. And I know I've kind of beaten that horse, but it's true. There are days that you're going to need to recognize this isn't going to be my day, and turn off your computer before you do something that you're going to regret. Yeah, absolutely. Joe says, can you talk about what are realistic targets for the markets that we cover? We actually have high probability targets for each of the tools, Joe. With the Hawk Scalper, we're looking at $50 per contract. So in a market like the NQ here, which trades $5 a tick, we're actually looking for a 10-tick target. With the markets, say like the E-mini S&P or the euro or soybeans or wheat or some of these other markets that trade at $12.50 a tick, that's only going to be a 4-tick target. Some markets like crude oil, which are more volatile, gold would fall into this category. Sometimes I will do it with instruments like the Russell or the mid-cap, where larger moves tend to be the norm because of the increased volatility. I will double the profit objective. So instead of $50 per target or per contract, I would have a $100 contract target. The Falcon is double what the Hawk is. So whereas we have a $50 target with the Hawk, we have a $100 target with the Falcon. That would be true for the Raptor also. With the Eagle, we have double the target again. So instead of a $100 target, we would have a $200 target. And you would adjust the tick size or the target itself based on the tick value of the instrument you're trading. And once again, in a market like crude oil, I would probably double the objective. Yeah, Joe says he's cut his teeth on the Forex market, so he finds that he might have a too large of an objective in the futures. Well, certainly today, any objective more than a tick is too large. I also wrote a manual on futures trading. If anybody would like to have it, you can email me, and I'll give you my email address. It's kind of an introductory guide to trading futures, so if you're new to the futures world, you can email me at Eric, that's Eric with an H, E-R-I-C-H, at supportandresistance.com. And just mention the beginner's futures guide, or getting started trading futures is what it's called. It will just go over some of the basics of what the futures markets are, how they differ from stocks and other trading instruments. See, now we're getting a red bar buy. So here was another first micro-macro cross that failed. It should have worked. Oh, actually, let's see. There was the first micro-macro cross there. Did it hit our target? Oh, let me put in a 10-tick target. Nope. See, it turned about 2 or 3 ticks shy of our target. Wouldn't even give us our high probability profit target. So that's a very easy way to see that the market is not cooperating today. Let's go here to our macro pullback signal. We'll even give them this one here. So we're going to enter on the hash mark. Did it get to our high probability target? Nope, sure did not. Not even close. So yeah, this is not a day to be trading today, folks. Even crude oil. I'll bring over the crude oil chart. Now let's look at the Falcon. We've been looking at the Hawk all morning. So here's crude oil on the Falcon. And same thing, nothing. Well, we did have a trend change signal right here. You might not see the hash mark. It's printing right on the median line. That actually followed through. But that was the only signal we had today in crude. See, I didn't even bother looking at some of the other tools. Yeah, see, look at the Falcon here. Look at the roller coaster effect of the trend line. Our filter all over the place. No, this is just a dead day. It's a sucker's day is what it is. The market is content where it's at. There's obviously no news to drive it one way or the other. Okay, I'm going to go over your questions. If I missed your question, please repost it. If you have any other questions, please ask. Otherwise, we're going to close up the room because there's nothing going on here today. I like this comment here from Joe. Joe says, what I've come to realize after a few years of trading is I need to be the ultimate filter. The system is just the tool. I need to know trading principles first and then use the tool to confirm and stay disciplined. That's a very good comment, Joe. Very insightful. Yeah, these are just tools, right? Like a guitar or a violin. If you just start playing a musical instrument for the first time, yes, you'll be able to make music, but it might not sound like the music that, you know, an accomplished musician would be performing on that same instrument. And I'm not saying I'm the accomplished musician here. I have been doing it longer than most of you. That's true, but there is a little bit of a learning curve. Fortunately, the learning curve is short, but there is still a learning curve involved. So these times, it's actually, you know what? It's good that the market has been this frustrating this week, because this is something that you need to take away from this week. Don't just, you know, poo-poo it off and say, well, okay, that's nothing to learn from this week. There's actually lots to learn from this week. And probably the biggest thing to learn is that, like Joe said, I think he summed it up well, that you're the ultimate trading filter. You're actually the ultimate trading tool. What we're providing here with the DTS are hammers and saws and guitars and violins. And you have to still be able to interpret what is coming out of here. Yeah, like Joe says, and this would be in response to an earlier comment I made, that's all that only winners are being advertised out there. You know, all the systems make it look as though you never have a losing trade, and that is just not true. I'm going to put soybeans back up in my mix. I often tell people, and sometimes they don't hear me say stuff like this when, you know, we post a number like this, because, well, we are in sim mode, so that allows us the luxury of trying a few things, right? We can play a little bit here. Next week, like I said, we're going to get very serious. We're going to roll up our sleeves and only look at quality signals. I'm going to make that my objective. We'll make it as realistic as possible. But I often tell people this is the only place you're ever going to see a room moderator admit to taking a losing trade. Because it happens. It's part of trading. Yes, Dustin says the problem is recognizing those sideways days before I start taking losses. It's not always easy to identify when the market is range bound. No, it is not. You are absolutely correct. It is the bane of many a trader. About the best advice I can offer is that, you know, try to be very objective. when you look at your chart. When you open up your chart and you say, okay, well, there's a swing high, there's a swing low. So that seems to be kind of the range that we're in. Okay, we're through the bottom end. Here we come. Okay, here's a first micro macro cross to the downside. Oh, okay, it didn't trigger. Oh, here's a macro pullback. This should be a good signal. And this should have been a good signal. There was every reason for it to be a good signal. And of course, it didn't matter where you placed your stops, you eventually would have been tagged. So right now you'd be saying, was that just one of those things? Because, well, it was within the first half hour of trading. It was within opening range. Maybe I should have been more selective. Okay, so, and it was near quarter to the hour, which is my least favorite time to trade. So then you say, all right, well, they're not trying it to the downside. Let's see, let's shoot a trend line here. Yeah, it looks like there's trend line support here and a macro pullback. Let's go in with a buy. And it's, wait a minute, what are you guys doing to me here? And all of a sudden you get stopped 2 for 2. Right now, your spidey senses should be going crazy saying, what's wrong with this day? So, yes, admittedly, you would have taken 2 losers to find out this information, but you know what? 2 losers are better than 3 losers, or better than 5 losers, or better than 10 losers. Like every trade we've tried today has failed. And how many signals have we looked at? 5 or 6? So if it costs you a couple $100 to find out that the market is not cooperating, well, that's the ante. That's the admission for the day. So unfortunately, Dustin, sometimes there's no easy way to find out the market is going sideways, like you said, until you're in it. But sometimes you have to test the waters a little bit and just see what's happening. And today, definitely a sideways day. Also, I'm going to give Jim a little promotion here on his programming. Where is it? If you haven't got it already, you can bother me for this one also. Where is it? Here it is. First hour range. Now you have to set it for your own time zone, but I have to admit this is a great little indicator that Jim has programmed, and you can download it from the NinjaTrader website, or if you want to bother me for it, I'll send it along, unless, Jim, you have any objections. And what it does is it's going to highlight the high and the low of the first half hour of trading. And I've been watching this for a few days, and I have to admit, it's a darn handy little indicator. And what it does is it shows you, or it's likely to point out congestion areas to you. Okay, so as the market gets closer here to this high, well, it may choose to back off. Right? As it gets closer to the low, it may choose to back off. And you can see, again, we're a little bit range bound. Actually, you know what? I'm going to throw that on the Raptor. I don't have anything on the Raptor yet. That's going to be my Raptor thing. So we're going to use the Raptor to identify the high and the low. Yeah. Joe says when I was using my analogies of the somebody who's talented, who's developed their skills to refine them to make everything look easy. He says, would you rather see me play basketball or LeBron James? That's true, right? The pros always make it look easy. Yeah. Joe says, I always learn more from my losing trades than the winners. Okay. Mo wants to see a 1 minute crude oil chart. Is that right? Pull up crude on the 1 minute. Okay. Is there anything in particular here you want me to look for, Mo, as I build my 1 minute crude oil chart? Okay, here's the 1 minute crude. Yeah. Jim says, let's wrap up. It's Bloody Mary time. I'm with you, Jim. A couple more questions. Joe says, I looked at a competitor for as long as I looked at DTS over the last 2+ years. The guy never had a loser. At least he never showed one in his recaps. Yeah, it's true. Like, people aren't stupid. You guys aren't stupid. You guys, a lot of traders don't give themselves enough credit. We get down on ourselves sometimes if we take a losing trade. And you shouldn't. This is a very difficult profession. I have worked with some very smart people in the non-trading world. I have worked with the likes of lawyers, with doctors, with mathletes, people much smarter than me. And I don't say that with any false humility. These people were brilliant, and they had a hard time with trading. So it's, don't ever beat yourself up. It's not an easy thing to do. And I've got Jim's permission to pass out the first hour indicator. So if anybody would like a copy of that, like I said, you can get it at the Ninja website or shoot me an email. I will be happy to forward you a copy. And we'll see whether that doesn't help identify some of the sideways range and, keep us out of some trouble. Here you can see it on the Raptor. Again, it's that first half hour bit, right? Where you just let the market shake out and see where the buyers and sellers have drawn the line in the sand and say, okay, I'm going to stay away until we get above or below, or as the market approaches this, maybe we'll deal with a reaction and so on and so forth. If you are trying to test the waters this afternoon, well, we're trading at the upper end of this trading range, so I would suspect we're going to see the market try to get to the bottom end of the trading range. Maybe down, 44, 46 seems like a likely target. Maybe even get down to yesterday's low at, where was that, 44, 42, give or take. But me, I'm going to go call it an early weekend. All right, you guys. Be careful. We'll talk to you next week. Bye for now. Bloody Mary time. Woohoo!